Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous?
Hey, welcome to Modern Investing Techniques, episode 106. It's July 14th, 2026, and I'm Patrick in Vancouver. Time to break down today's market setup and find our edge. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. Oil above $80 opens a narrow window for Canadian energy exposure even as shipping fee risks mount in the Strait of Hormuz. The S&P 500 closed at 7,515, down 0.8%. The NASDAQ Composite closed at 25,873, down 1.6%. The TSX Composite closed at 35,253, down 0.1%. Chip stocks rebounded in pre-market while energy led the session on the oil move. Earnings season opens this week with banks reporting, and the Bank of Canada decision sits 2 weeks out. The portfolio holds a 7.0% alpha versus the NASDAQ across 36 benchmark trades with cumulative simulated profit of $280.97. With volatility premiums elevated, let us examine a practical income strategy that capitalizes on today's conditions. A covered call ETF strategy lets investors collect premium income on existing holdings by selling out-of-the-money calls each month. Today's oil spike and chip rebound create conditions where volatility premiums are elevated, making the income layer more attractive than in low-vol environments. To implement, screen for sector ETFs trading near their 50-day moving average with options volume above the 20-day average. Then sell the 30 delta call expiring in 30 to 45 days on platforms such as Questrade or Interactive Brokers. The approach has historically delivered the best risk-adjusted results in sideways or mildly bullish regimes when realized volatility exceeds implied volatility by at least 3 points. The main risk is capping upside during sharp rallies, so position size should stay below 15% of the TFSA. This setup works best when you already hold the ETF and simply layer the call sale on top. You would run the screen once a month and let the premium offset any modest downside. While we wait for stronger setups, here is why today's practice investment is a deliberate pass. No catalyst meets the 3+ factor threshold after the regime check. We are watching First Atlantic Nickel for volume above the 20-day average on any retest of recent support. The current cold streak requires explicit confirmation before new positions. Skipping weak setups preserves capital for higher conviction entries. This is a simulated trade for educational purposes only with no real money involved. Next Monday, we will target energy names only if oil closes above $82 with sector ETF volume confirmation. Discipline is measured by what you do not trade. That discipline shows up in our ongoing simulated results. No newly closed trade since the last review. The most recent practice investment has already been reviewed. Current holdings remain open and pending their scheduled evaluation. There is no new realized result to report today. The portfolio now shows 41 total trades with a 56% win rate. Cumulative simulated profit stands at $280.97. Average return per trade comes in at 0.69%. The current streak sits at 1 loss. Our AI analysis is learning from the pattern of waiting for volume confirmation and adjusting entry filters accordingly. Now, here is something that most retail investors get wrong, and it cost me money before I figured it out. Imagine you bought an S&P 500 ETF in 1976 when Jack Bogle launched the first index fund at Vanguard. Your order filled at the closing NAV, but the real story is what happened in the decades after. Most active managers fail to beat the index after fees, a mathematical reality driven by the fact that active funds as a group must underperform the market by their average expense ratio. The 2% plus MER common in Canadian mutual funds versus 0.05 to 0.25% for index ETFs creates a compounding gap that grows to tens of thousands of dollars over 30 years on a $100,000 portfolio. Professionals always compare total cost of ownership, including trading spreads and taxes, before choosing active versus passive. The biggest misconception is that paying higher fees buys superior stock selection. Instead, always calculate the fee drag over your expected holding period first. While index funds remain the baseline, specialized tools can add targeted exposure. The Zebia Axis Agentic Data Foundation automates data preparation for AI agents by pairing expert engineers with automated pipelines. It cuts the typical 60 to 80% of project time spent on cleaning. Canadian investors running custom models on earnings or sentiment data can reduce pre-processing latency from days to hours. Access starts at the enterprise tier with a demo request directly from Zebia. If today's momentum strategy interests you, this platform is exactly how you would screen for setups like this. The Sprott Nickel Miners ETF now includes First Atlantic Nickel after the June rebalance. It gives direct exposure to nickel supply chain names inside a TFSA for commodity diversification without individual stock risk. Trade it commission-free on most Canadian brokerages. A few quick developments worth monitoring this week. China's June exports surged 27% from a year earlier. The increase occurred as the AI boom drives strong demand. Export strength concentrated in AI-related goods. This signals sustained demand for semiconductor supply chains. Investors could add a 2% position in a broad semiconductor ETF. The addition would occur on any close above the 20-day moving average. The details appear via bnnbloomberg.ca. Polymarket partnered with blockchain.com during World Cup semifinals. The integration lets users access prediction markets directly from a brokerage account. Traders might allocate no more than 1% of a speculative sleeve. The allocation would test event contract pricing mechanics this week. The partnership gives brokerage users a new path into prediction markets. Event contracts become reachable without separate platform logins. The announcement came through Bloomberg.com coverage. An Indian activist's health worsens in hunger strike for students. Youth-driven protests focus on exam integrity. Those protests could pressure Indian education tech spending. Investors should hold off adding India equity exposure. The hold continues until protest resolution clarity emerges. The situation involves ongoing hunger strike developments. The update originates from Bloomberg.com reporting. United Health is investing $1.5 billion in AI. Management targets a 2-to-1 return on that spend. The quantified AI spend gives a concrete benchmark. The benchmark applies to healthcare AI adoption timelines. Investors can keep United Health on the healthcare watch list. Entry waits for volume confirmation above the 50-day average. The information comes from Fool.com analysis. Before we wrap, open your brokerage screener, set volume filter to above 20-day average and sector to energy. Then sort by 14-day RSI. Note the 3 lowest RSI names and record their support levels for Monday review. I've got my eye on energy sector volume confirmation for next week's potential entry. That wraps up today's modern investing techniques. Remember, every trade is a learning opportunity, win or lose. Subscribe, share with a friend who wants to invest smarter, and we'll see you tomorrow. And if you'd rather watch than listen, find us on YouTube at NARA Network. Links in the show notes. And before you go, this show is part of the NARA Network, a family of daily podcasts on tech, science, and markets, each one a short, sharp briefing you can finish on the commute. If today earned its place in your feed, here's your next listen. Fascinating Frontiers, the most fascinating news from space and science. Find every show free at naranetwork.com. And on the website, every episode's visuals live in our free image gallery at naranetwork.com/gallery. Royalty free under Creative Commons, download with attribution. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you didn't last?